the word risk has to be also understood in its own way, because everybody uses risk from a financial risk point of view. Same thing we are using in non-financial risk. Yeah. But I think the word which is more adaptable today in the industry is the word resilience.
That's right.
Now, I want to just tell the difference. This came from the Basel, 2020, this guideline came, the Basel Accord on resilience. From there, country after country came up with their regulation. RBI came in last year or year before, the Resilience Act here. If you look at it, this is one regulation I've seen that is customer focused. Mm-hmm. It is saying you are providing a service to your customer, and it is your obligation to make sure that your systems and your services are available when your customer wants it. So all the regulations so far, a regulator written is to protect the bank from falling off the cliff. This is the one, it is protecting the customer to making sure that your service provider, which is the bank, is providing service they promise you to give. So the words that is very relevant here is two. One is stresses, other is constraints. Now a bank can have a lot of stresses.
True.
Your IT system may not work, you can imagine now a cyber security may happen. You cannot tell your client, because I have a stress here, your service will not be provided.
True.
So to that, now you need to understand your end-to-end process. From start to end, how does this service happen? What are the potential stresses that can happen? And again comes the word constraints.
True.
Constraints are external to you. There's a probability that people are not able to come to work. So if you want to measure all this and try to connect your risk to that, and then quantify it and say, how resilient am I in my operations? That is where India has now reached. Our regulator has identified that, and the guideline is here.
The customer needs for every industry varies from being, let's say, need for availability at nanosecond to, okay, 2 hours is okay. No, it varies industry to industry. Like, if you're booking a car, you don't need to get the car next moment, right? It can happen next week. It's not mission critical that you take delivery of your car. So an automotive industry does not need to invest in, let's say, instant delivery of car or correct? But when it comes to healthcare, financial transactions, and another example, of an old example, I'm taking the old example because they are so, they're full of creativity. Those days the systems didn't exist so much. So somebody invested in a stock. So the money was remitted to the broker. And the bank, in its, 130 cutoff, found, say, out of 4 crores, maybe some 30 rupees short. So what do? Do you let it pass, let a 30 rupees overdraft happen, or do you not let it pass? So typically, in a relationship banking, you let it pass, call the customer saying, please come with 30 rupees cash, or whatever, send somebody. But in that occasion, the person who's doing it did not let it pass. And that was a large stock transaction where there was a commitment and therefore there was an issue. Customer came storming in and time had passed. Now, even if people want, it's like, handing over a dead body to a doctor saying revive. But that bank found a way, luckily, because the broker had an account in the bank, and interbank at 3 o'clock, they could transfer money to that and save the day. But that brings into this thing that, okay, you are trying to manage risk, but there's a risk of customer moving away, a risk of customers all moving away or somebody else. So I think